To expect on the local market. Stan Shamu joins us from IG in Melbourne now. Stan, good to see you there. Obviously, we're watching out for a couple of earnings too. Cochlear down EDI there. Overall, what's your opening call for the ASX 200?
Morning, Brady. Yeah, we're currently calling the ASX just down about 0.2% to the open to 5,101. So it really does look like it's a fairly mild or benign open, but it's all about really watching out for some of the key macro events we've got today. And of course, it might be a little bit of consolidation and cautiousness as we wait for some of that key data. Of course, we've got some earnings on to look out for as well. We've got Cochlear coming out with its full year earnings. Of course, the company doesn't necessarily give explicit guidance, but I think the market's looking for a net profit after tax of about 164 million. Now, this will probably be driven by sales of around 708 million. It does look like a lot of analysts feel that focus will be on the composition of the second half sales. Of course, they had that massive recall for Nucleus 5, so it will be all about exactly how the company managed to improve the situation, if they did improve their situation, that is, and of course trying to forecast what sort of sales they can expect for their Nucleus 6. And of course they've had a few upgrades for their processor as well, so we really need to see how this has impacted sales, particularly more skewed to that second half. Coming from Dana, we do have guidance already of 210 million. Of course, a lot of these mining services and engineering companies went through a pretty big downgrade cycle, so it does seem like some of them might be fairly conservative on their guidance. A lot of analysts actually feel that Dana might come in ahead of that guidance of 210 million. I think Goldman Sachs is expecting around 215 million. So it really will be all about exactly what contribution they're expecting from the mining side of things. Of course, it's a pretty diverse business, but mining has been one of their key revenue drivers for a while. And any positive commentary on that front should be supportive for Downer. So perhaps the fact that they're coming off a very low base might be supportive of their earnings today.
Just in terms of, as you said, those big macro event risks, we've got the RBA, but pretty much everyone's baked in a rate cut today.
Yeah, absolutely. It does seem like the market's firmly looking for a cut, 91% chances of a cut to be exact, and 26 out of 27 economists are expecting that 25 basis point cut. But most importantly, I think the market's also expecting 50 basis points worth of cuts over the next 12 months. So it might be all about exactly what sort of urgency that the RBA has when it comes to the second cut, and of course whether or not we can expect it sooner rather than later. Now, if this is the case, then perhaps this will be as dovish as the RBA can get, because a cut is more or less priced in by the market at the moment. So we'll really need to focus on the urgency of the cut. And of course, we've got some other releases to look out for as well, including the ANZ job ads and the trade balance numbers at 11:30. So they'll definitely set the course for the RBA today. Of course, yesterday, following that disappointing retail sales number, we saw the Aussie dollar drop into 88.5. So we have seen a minor recovery of that back above 89 to 89.3. So it looks like we've got that 90 level back in focus. That will be key near-term resistance for the Aussie dollar. Should we get a slightly hawkish statement, or not as dovish as the market expects, then we might trade back into that level, and possibly that's where the sellers will start coming back in. But of course, if we do get a situation where the statement comes in very dovish and points towards another cut being imminent, then we'll probably see a momentum play for the Aussie dollar. It will probably slide once again and possibly break through yesterday's lows in that 88.5 level, which is now near-term support, and this might see us trade back towards those lows from 2010 at 88.7. So that at 87.7, that is, and that will probably be the key level to look out for going forward.
All right, Stan, thank you so much for that.
Cheers, Brady.
Stan Shamu there from IG. Well, it seems, as we were just hearing, an official interest rate cut today is a near certainty despite the upcoming election. 23 out of the 23 economists polled by Sky News Business expect the Reserve Bank to cut the overnight cash rate to 2.5%. Looking further out, 13 out of the 23 economists